this video we are going to be discussing about demand and supply strategy. But before that, I want you to pause, take 2 seconds of your time, subscribe, like, and leave a comment down there. With that said, let's dive to the main topic. So what's demand? First of all, demand, this is where institutions place their orders. The demand is this one here. Let me show you here. This is the demand zone here. This is a demand. So we are going to be discussing about demand and supply strategy here, not indicators, not guesswork. This is where institutions place their orders. Most traders chase price. Smart traders wait for the zone. Demand and supply zone shows you where the price is likely to reverse. You see this downtrend here, then the price reverses from this here after breaking this break of structure here, where big money steps in. So after this move here, this move is always a fake move, trapping retail traders like us here. But if you trade with the smart money people, you will have to take your positions down here. This is a discounted position here. Yeah, so this is where the big money steps in. uh this is where risk is small and reward is big. Your risk, this is your risk here. Let me show you. So this is our buy. So this is where we are. This is our stop loss here. The risk is small and the reward is big. You see, you target at this position here, the buy side liquidity. uh Risk to reward ratio 9. You're risking 9 times. So if you have ever wondered why price suddenly explodes, why your entries keep getting trapped, stay with me. Let's break down why demand and supply zone are the best way to take positions. So before explaining this, what does demand really mean? Demand is an area on the chart where buyers are stronger than sellers. The buyers here are stronger than the sellers. These were the sellers here, but the buyers got in here and counter traded the sellers here. Yeah, so they have completely reversed the trend. It was buy a sell trend, now it's buy trend. Yeah, it's a price zone where big institutions previously placed large buy orders, causing price to move up very fast. Yeah, this was a place where the institutions placed their buy orders previously, then the market came back and we reversed. I mean, when the market came back to this zone here, it reacted again and went buy. Yeah, so when price returns to this zone here, buyers are likely to step in. As you have seen here, buyers have stepped in and the price often reacts strongly, and the price reacted strongly. You see this big move here. Yeah, so simply demand is equals to buy zone. When you hear demand is a buy zone. Yeah, but remember, not all demand hold the position or the trade. The market always respects some certain demand zones, not all. Okay, so let me explain. Let me take you through this one here. uh this is 15-minute demand zone. I mean, this, okay, let's say it's just 15-minute demand zone here. Let's take our chart to 15 minutes. This is 15-minute demand zone here, as you can see. Yeah, this is our area, this is our point of interest here. Okay, um for a demand zone to be valid, here, we need it to fulfill 4 conditions. Okay, the first condition is the higher time frame. It should be of higher time frame here: 15 minutes, 1 hour, 4 hours, daily, weekly, monthly, and so on. So it should be of higher time frame. It should have a clean break of structure. That is number two. Clean break of structure. Okay. And number three, it should have at least a liquidity being swept. As you can see here, this is the big move. Inside the big move in lower time frame, we have pullbacks, high high, high low, high high, high low, high high, high low, and this is the liquidity that is going to be swept before we enter the position. So basically, this liquidity here are those retail traders who take the trade early. They don't wait for confirmation, they don't wait for the trade to come back to this position before they take. So they become our liquidity, and now we take the trade now. Okay, this is where we take our position. So the first one was it should be of higher time frame. Second one, it should have liquidity. Third one, it will have an imbalance or a fair value gap, FVG. I know you guys know what FVG is. Yeah, it will have a fair value gap. That is the third condition. The fourth condition, I mean, the first one was of higher time frame, clean break of structure, liquidity, and imbalance. That is it basically. We don't have any other condition. Those four should be fulfilled before you take a trade. If your system doesn't show you all of those four conditions, don't take this trade. You're going to lose the trade. Okay. So this is where we take the trade here. This is where we place our trade, and we target either buy side liquidity, this one here. If you place that one, you're gonna be risking 8 pips, or let's say we are risking $100. You risk $100 here, you get 4 times what you risked, so you get 400 when it hits this position here. But if you hold after this position, you will get 900 instead of 400, because the ratio is 9.03 risk to reward. You risk 100, you get 900 here. Okay. Okay, let's see. Within this big move here, we can take uh, smaller trades, not small though, but just another positions here. Okay, this one is a clean break of structure, as you can see here. Clean break of structure, small demand zone. Here we have a small demand zone here. This clean break of structure, we have those pullbacks here, and the market comes, sweeps the liquidity on the lower time frame, those small pullbacks like this ones here, and we enter the trade from this position here after all the conditions are met. After all the conditions are met, this is where we place our trade. We risk, let's say, another $100 to get 600 if it reaches this position, this buy side liquidity here, because the market is moved by liquidity, buy side and sell side liquidity. This is buy side liquidity and this is sell side liquidity here. The last point, this is sell side liquidity here. Sell side liquidity, sell side liquidity, sell side liquidity, sell side liquidity. I will explain what sell side liquidity is, but not in this video. You can enter another trade here. This is demand zone again. Although the most like reliant demand zone is this one here, the extreme demand zone. These ones are just for the big move, when the big move is on the move before it gets to the buy side liquidity. You can take smaller positions here, because this big move can take 2 days, 3 days, so you can take these smaller positions meanwhile as the trade plays out. So this is the another demand zone here. We have a demand zone here for 15-minute time frame. We have a clean break of structure here. We have those pullbacks or liquidity in the lower time frame, like 5-minute, 1-minute time frame. Then the liquidity has been swept, came to our point of interest. Then we take the trade and target the buy side liquidity. Yeah, here you are risking 100 to get $400. Yeah, so let me show you this in real-time chat. So this was my demand zone here. I took this trade on Monday. Yeah, but I did my analysis during the weekend here. So this was the trade I took on Monday. Yeah. uh I was on my 15-minute time frame here. This is 15-minute time frame here. We have imbalance or a Fiji here. This imbalance, this, you see the space between the first and the third candle here. First, second, third. The space between 1, 2 and 3. This space is what we call fair value gap or imbalance. Okay. Yeah. This is the liquidity that I'm talking about. It has been swept here, as you can see. Liquidity has been swept, and before that I took this trade and I lost the trade, guys. Yeah, I lost, but this was a big recovery. Yeah, so first condition, it should be of higher time frame, 15-minute demand zone. We have clean break of structure here, this beautiful break of structure here. We have this liquidity and imbalance. We have all the four conditions that we needed. So I took the trade from this position here, and it went and played out. I was targeting this buy side liquidity here. We still have this one, this one. I could have targeted those. I could have targeted this one, but this is gold. You cannot hold all of this time. Yeah, yeah. I could have made a lot of money, like 8R, and this one was 6R. So I made here 4k, 4,000. I think it was 4.2 or something. Yeah, I could have made something like 6 or 7 if I will have held up to this position here. But it's okay, the market gives us opportunity each and every time. Yeah, so if you found this content useful, I'm gonna be discussing about the supply next video. I want you to hit that subscribe button, like, and leave a comment down there of what you think about this strategy. It's very simple. Peace, guys.